can just this is the insert.
Okay. And this is what? A, sir? A level, sir?
Yeah, A level.
A level, okay.
So read source B. So you can see this. This is the question.
Okay. Yes.
So you want me to
The payback period.
share the question paper? So
300,000. 2 lakh is the inflow.
yeah. So then 140, 130, 110.
30,000.
141,
Sir, sir, cash inflow is first year is 200, second is
140,
230.
140, 130, 110, and 100,000.
So second year cash inflow is 230.
230 is it? This is 230.
Sir.
Ah,
Yes, sir, it's 230.
okay.
Fourth year is 210. Second year is 230.
Ah,
Fourth year is 210. Yes, sir, you've written 210. That's right.
correct only, no? 2 lakh, 230, 240, 210.
Yes, sir, correct.
2 lakh,
Yes, sir.
230, 240, 210. So 140, 130, 110,
Hmm.
100,000. So net cash flow, here it is minus. So this is 3 lakh. So here it is 60.
300,000 will be in
Here
brackets.
it is 60,000. So net cash flow is 60,000. Here it is 1 lakh.
Yes, sir.
So here it's 1 lakh.
And
Here it's
1 lakh, then 1 lakh 10,
1 lakh 30,000.
1 lakh 30,
1 lakh
1 lakh 30,
1 lakh 30,000. So
1 lakh 30,000. Yes,
1
sir.
lakh 10,000.
And then it's 1 lakh 10.
So now you tell me how do you calculate payback period now?
Yes.
So payback period, to calculate payback period,
So we see how much time we're completing, how much time it's taking.
correct,
So
60,000.
300,000 and 60,000, 240,
So 160.
then 140,
Second year we have recovered 1 lakh 60,000.
140.
So third year we have recovered
Yes,
uh, 2 lakh
2
90,000.
lakh 90,000. Yes.
So now in this we just need
And then
10,000.
fourth year,
Okay, we just need
yes.
10,000. Out of 1 lakh 10,000 we
So
need
it will be
10,000.
3 years and some months.
Okay, so then how do we calculate?
Yes.
10,000.
So 1 lakh 10 divided by 12.
No. 1 lakh 10,000 divided by 110,000.
12. Oh, that will be 1 more, sir.
Into
Okay,
12
okay, huh. Sorry.
is how much?
Into 12, yes.
So how much you will get?
But I'm just calculating. 1.09,
1 lakh
which is
10,000.
basically 3 years and 1 month.
1 lakh 10,000 into 12. So basically it's 1 month.
10 by 110 into 12.
Yeah,
1 month,
1
yes.
month. So basically it is 1 month, almost 1 month.
Yes,
1.09
sir.
is 1 month. Okay. So the payback period is 3
Hmm.
years, 1 month. So
And 1 month.
we are getting back, we are recovering 3 lakh after 3 years, 1 month. That's all.
And 1 month.
So the payback period is 3 lakh, 3 years, 1 month. So
Hmm.
now you tell me the next part. What is the next part?
Accounting rate of return is equal to average profit over average investment into 100.
So what is the average profit?
Wait, that's it. So the accounting rate of return is capital relevant discount
So
factors,
if you add all this, it will be equal
useful
to
life
4
of
lakh.
4 years with no. Yes, sir.
Okay. So 4 lakh is the average. So 4 lakh is the net inflow. 3 lakh is the outflow. 4 lakh minus 1 lakh.
Hmm.
So accounting rate
Hmm.
of return is 4 lakh
4 lakh minus 3 lakh.
minus 3 lakh
100,000.
uh,
Okay.
so divided by 5 because it is
Mm-hmm.
4, sorry, average.
Minus 3 lakh.
So for 1 lakh divided by 4 is 25,000.
Okay. So 1 lakh by
25,000. So investment
25,000, 25%
investment,
accounting rate of
no
return.
no investment is average investment 3 lakh divided by 2, 1 lakh 50,000 into 100. So 25,000 by 1 lakh 50,000 into 100.
How come average investment is 3 lakh? Okay.
Average investment, so investment is 3 lakh, no, divided by 2.
Okay. So 1 lakh 50,000
Yeah, 25 divided by 150
divided by,
into 100.
I did not
16.67.
understand, sir. I did not
So what is
understand.
the formula? Formula is
Sir, average profit over average investment into 100.
correct. Average profit is, what is average profit? So this is 4 lakh is the net inflow.
Average profit is 3 lakh by 2.
So no.
Okay.
So income is 4 lakh. Expense is 3 lakhs. 4 lakh minus 1
Hmm.
lakh is
Hmm.
1 lakh. 1 lakh divided by
4 lakh
3.
minus 3 lakhs is 1 lakh.
Okay.
1 lakh.
So 1 lakh divided by 4 is average
50,000.
average profit, no. 1 lakh divided by 4 is
Okay.
average profit, no. So what is the formula?
25,000
Average profit by average investment.
divided by average investment.
Correct, no? So average profit is 25,000. Average investment is 3 lakh divided by 2.
Yes, sir.
3 lakh divided by 2 is 1 lakh 50,000.
1
So
lakh 50,000.
25,000 divided by 1 lakh
1 lakh
50,000 into
50,000.
100 is 16.67%.
16.66%.
Okay. So you can round it off, you can write 16.67%.
Hmm.
Okay. So then
Okay.
net present value. How do you calculate net present value? Tell me.
So NPV, you take the net cash flow, then discounting factor, and then you get discounted cash flow.
Okay. So can you try? 0, 1, 2,
Yes, sir. I can
3,
try. One,
4.
two, three, four.
Okay. So net cash
4.
flow, you have to take net cash
That's
flow.
it.
So what is net cash flow? First year it is
So
3,
net cash flow is basic.
3 lakh.
First year it is
Yeah,
300,000. 3
300,000
lakh,
plus
yes.
60,000,
60,000 to 100,000.
100,000, 130, 110.
Yes, sir.
100, 130, 110. So
110.
what next? After doing this, how do you calculate? Next, what is the next?
Then we take discounted factors.
Correct. Discounting factor.
Discounting factors.
So which discounting factor you have to
Yes,
take?
sir.
Which discounting factor you have to take? So they have given
10%.
10% also, 12% also. Now,
Lower
huh?
percentage.
Which one?
Okay. We need to take 10%.
Why?
Sir, we have to take the lower discounting factor first, and then in a separate question, then we do the other one.
No. What does this say here? Say the cost of capital is 10%.
Okay, cost of capital is 10%. Okay.
Okay, we have to take the cost of capital.
Hmm.
Okay, so 10%.
Okay.
So 0.909, 0.826,
Hmm.
0.751, 0.683. So
First year we take 1.
NPV, no, always you have to calculate at cost of capital. Always.
Okay, sir.
Okay, NPV for
Yes, sir.
IRR you have to do that. 10% also, 12% also, that we have to do for IRR.
IRR and correct.
Okay, for cost of
Yes, sir.
capital we have to take
Hmm.
always NPV we have to take the cost of capital 10%.
Hmm.
Okay, so how we so multiply and write what is the discounting factor. 0.909. No,
First,
no, no, sorry,
year
sorry, not
zero
here.
is
Here,
one.
here it is
First
one.
year is one.
So here 0.909.8. Wait 1 minute. 1 divided by 1.1. 0.909. 0.826.
Hmm. 0.751.
0.751. So simply you can see this. So
0.683.
simply you can see the numbers from there and you can write down 0.683.
Yes, sir. 60,000 into 0.909 is 54,540. This is the discounted cash flow.
Okay, now
First, it will be the
so
300,000. So,
discounted cash flow. So first it is 300,000.
hmm,
So 60,000 into that
yes,
will give you how much?
0.909. 54,540.
54,540. Okay.
Yes, and then it will be
82,600.
okay.
So then
Then it is 130,000.
130.
51. Then it is 110,630.
110,630. Okay, next 110.
Next it is 110, 110, 75130.
75, 130.
130.
Okay, now these are all minus. This is outflow, no? Which is outflow, which is inflow? This is outflow.
Sir, out. So this is net cash flow.
This is outflow, this is inflow. So this is positive only.
Okay. Uh,
Now you calculate 5
sir,
4.
I'll do the net cash flow first.
So how do you do? You can simply straight away do it off. So 54540 54540 plus 82,600 plus
Plus 110,630 plus
110,630 plus 75130. So
minus 300,000.
22,900. So 22.
22 900.
So this is NPV.
Hmm.
Okay, so remember always NPV
Okay.
we have to take discounted cash flow. Okay, so discounted cash flow we have to take for NPV, we have to take discounted cash flow, and IRR we have to take discounted cash flow, but for payback period we have to take cash flow, and for ARR we have to take profit. We have to take profit.
Okay.
So since it is a
Yes,
project,
sir.
so the profit is the same as inflow and net outflow. So here, since this is a project which is written off, and so this is considered as expense, this is expense and these are all incomes. So this minus this is the net
Okay.
profit. So so 1 lakh divided by 4, so that is net profit. Again we have to do this way, this is how we have to do. So here see, we have not used cash flow here. Okay, so we have used cash flow but discounting
Correct.
factor we have not used. We have not used discounting factor, we should not use discounting factor, remember that. For payback period we never use discounting factor but we use cash flow. For accounting rate of return we calculate profit, because accounting rate of profit is nothing but invest profit upon investment. And NPV always we have to calculate discounted cash flow, and the net amount whatever we get is the thing we get. Okay, so then now we have to do IRR. So how do we do IRR? IRR we have already got this.
We use 12%.
Okay, so now you have to calculate discounting factor. Discounted cash flow at 12% you have to calculate. So now we
Yes, sir.
already got net present value at, this is at 10%. So we have to calculate discounting
Hmm.
net PV at 12%. How do we calculate? Can you please calculate discounting factor? I mean NPV at 12%. So here, so same way.
Yes, sir.
So since you already calculated 10%, you don't have to calculate again. So 1, 2, you just calculate at the rate of 12%.
10%. We just use net cash flow and then we do discounting factor as 12%.
That's all. Okay, net cash flow,
Hmm.
discounting factor we have to take 12%. So here it is 1 divided by 1.12. So 0.892, 0.893 also we can take, 2 also we can take.
Hmm.
0.797,
Then 0.712.
0.711 or 712,
And then 0.636.
0.636. Okay,
Hmm.
so now discounted cash flow we take.
Uh,
So discounted cash flow, this will be same 3 lakh 300,000. So here it will be
hmm.
60,000 into
60,000 into
0.893,
0.893, which is
53580.
53580. Then we have 100,000 into 0.909. Sorry, 0.797.
So it is 79,700.
79,700. Yes. And then 130,000 into 0.712, which is 92,560.
92,560
0.683, which is, oh, sorry, 75130.
75.
Sorry, 636. No, 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 sorry, sorry, that's wrong, sir. It is 69960.
69960. Okay, so
Yes.
so what is the NPV now? 53,580 plus
53,000 plus
79,700
79,700
plus 92,560 plus
plus 69.
69,960
Sir, it's a negative cash flow
minus
of minus 400, minus 4,200.
4,200. Okay, minus.
Minus 4,200.
So now how do we calculate
Hmm.
IRR value?
One
IRR
minute, sir.
is equal to what you have to do, 10% plus what is the positive NPV?
12%.
Positive NPV is 22,900.
Positive NPV is
22,900, no?
uh,
22,900
hmm.
divided by 22,900 minus of minus 4200 into 12 minus 10.
12%.
Okay, so 10%
Hmm.
plus 22,900,
Yes, sir. I'll just do the calculation.
22,900 upon 22 minus of minus is plus
Plus
22,900
plus 4200.
27,100. So here it is 27,100. So minus of minus is plus, no? 22,900
Okay.
minus of minus is plus 22,900
Yes,
plus
sir.
4,200 is 27,100.
Hmm.
Okay, so
Yes, sir.
22,900 divided by 27
So 2.54.
divided by 27 100 into 2, 1.69 into 2 is equal to 10% plus 1.69%, so that is equal to 11.69%. so IRR is 11.69%. so what is IRR? What do you mean by IRR?
Sir, sir,
Ah,
sir, how come did we get this? So, okay, so we solved all of them separately. Okay.
so 22,900 divided by
So
27,100,
20.
you get one value. In that you have to multiply 2,
Uh,
because 12 minus 10 is 2, no?
okay, got it, got it, got it.
Okay.
Correct, correct, correct. I was doing the whole thing
So
together,
you
like
can do
10%
that
plus
also.
this,
22,900
the
into
whole
2
thing together.
divided by this also you can do.
No, but then I'm getting 2.54%. Like from 10% plus,
No, no,
then I'm
percentage you
getting
don't
like
take, you ignore percentage,
2.54%.
you keep aside. A percentage you keep aside. You keep 10% separately. You do 22,900,
Okay.
22,900 into
Mm-hmm.
2 divided by,
Uh, 22,900 divided by 27,100 into 2,
correct, that,
1.69%,
correct,
and then you add
correct,
10% to it.
correct.
Okay, got it.
Okay, so this is basic maths, huh?
Mm.
So that's this
Yes.
is how you have to calculate 11.69%.
Mm.
So what is IRR? You tell me, what is the meaning of IRR?
Internal rate of
What
return.
is the meaning? What do you mean by internal rate of return?
So it basically means how much will the business earn back.
No, the rate at which the outflow will be equal to inflow.
Okay.
Okay, so if you are earning and
Mm.
see simply it means if if you are earning the rate of return is 10%, you will get a profit of 22,900. Okay,
Okay.
so if you earn a profit, or if you earn
Mm.
if you are incurring, so if you are incurring rate of return, so if you are earning
Mm.
10% rate of return, you will get
Mm.
this is cost of capital, no? 10% is cost of capital. What do you mean by cost of capital? The amount you are paying. If you are paying on
Yes, sir.
investment
Investment.
interest, if you are paying at the rate of 10%, you will get
Mm.
get back return on investment at 22,900. So similarly, if you pay interest at the rate of 12%, if you pay interest at the rate of 12%, you will make a loss 4,200. So if
Okay.
you have to earn minimum of 11.69% to break even.
11.69%.
You have to earn,
Yes.
minimum of 11.69%. That is, you have to earn 11.69% to pay off 11.69%, so that there is cut off. So there is no income, there is no loss, there is break even.
Correct,
So
sir.
that is what is IRR. The IRR is the rate at which the net profit means the break even, the project will break even. So there won't be any profit or loss at that rate. So if you are earning revenue, you have to earn 11.69%, and if you are paying also, you have to pay 11.69%. Then there is no profit, no loss. So if you pay more than 11.69% interest,
You will face a
you will
loss.
face a loss. Understood?
Yes, sir.
Similarly, if you think from the earning point of view, you have to earn more than 10% to make a profit. Understood?
Okay.
So
Yes,
you have
sir.
to think that way. So that is what is internal rate of
Mm.
return. So because whatever we earn, we pay. Here we are assuming that whatever we are earning, we are paying. So internal rate of return is something we get back.
Yes, sir.
So at the rate of 10%, we get, will be paying more less interest, so we'll be getting more profit. And at the
Okay.
rate of 12%, we will getting less profit. Will be incurring loss because we are paying more interest. So
Correct.
understood. So we have to
Mm.
understand the nexus of earning and paying also.
Okay.
Okay, so this is what is the meaning of IRR. So payback period is at what rate you get back the money, how many years you get back the money. Average rate of return is how much profit you get back, or how much profit you are earning from the project. IRR is at the rate at which the project will break even. Simple. The rate at which the project will break
Okay.
even.
Hmm.
Okay. So
Yes, sir.
maybe